Good morning from Chicago traders. It's 8:01 a.m. Chicago time on Friday, the 9th of April, 2021. Happy Friday, everyone. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning on episode number 1969, it is looking like risk off after a new all-time high yet again on the S&P minis. The S&P minis pushed to 4102.50 yesterday. We did push to a high of 95.50 on the close yesterday, and we just pushed right through to 4102. 50, and we have come off, and now we're trading back at 40.80 with a low of 40.83. So what the minis have done, the Nasdaq is weakish, but allocation seems to be to the S&P big players, and it has come off a fair amount. So slight risk off sentiment. Overall, the Dow continues to hang on to a lead of 35 points, up 0.1%. And then the rest of them and the rest of the U.S. Indices are lower. The leader today is the dollar. The dollar is trading at 92.40 and a half, up 33 and a half cents, 0.36%. The Euro stocks and the DAX are up, but only slightly. Everything else is lower. Silver is the weak link here, or the weakest on my quote board. Silver's trading at 25.09, down 50 cents, or 1.9%. Gold is off $21 or 1.22%. Those two products have been in a kind of a zigzag bracket for some time now. The Nasdaq is weakest of the indices, down 85 points or 0.63% in real time. Crude oil holding at 59.31. Crude got below 59.20, trading inside of yesterday's range basically, and that's where things stand. So that's the overall picture. I don't know about you, but it's pretty confusing looking at what. I'm always looking at the auction, and I'm always asking the questions of what has it done, what is it trying to do, how good of a job is it doing. It can be seen in the ES what's happening here. Hard to see in the metals what's going on. Hard to see in crude oil what's going on right now, and those are key fundamental products. The treasuries are on a downtrend. The treasuries are pushing lower today, which is probably the catalyst for this drop in the equities. Again, when the treasury futures drop, yields go higher, interest rates go up. So this is usually these move in opposite directions, but currently they're moving in sync with each other. The S&P has traded 188,000 contracts. 188,000 contracts. It has pushed the low, so now we have a range of, it's pushing lows again. So now we have a range of 20 points, almost exactly 20 points on 189,000 contracts, and about 70% of the overnight inventory is short. We moved through the balance. We built a nice little consolidation area in the middle of the range. And this is starting to look familiar. The setup right before the market opens is starting to look familiar to us, where we come in and we are below where the market has balanced out. Throughout the session, we find the overnight point of control, the full session mid, the full session VWAP, all sitting at the same price. And then we come back up to it, pause for half a second, a little zipper, and then we push through. It's something we've seen over and over again. So that's where that stands. Let's take a look at what was expected yesterday. Don't forget, we have wholesale inventories at 10 Eastern, a half hour after the open. And of course, everybody's paying attention to what the White House is doing with its budget proposal. Those are key elements there. Here's what we looked at yesterday. Yesterday, I talked about the strong potential for finding support down here, 76 to 67.75, somewhere in that area. The first scenario is a pullback towards the 76. Did not expect the gap to fill, expected it to stay high up, and probably holding the 40-80 area where we shot up from yesterday, and then to start pushing higher, which is what happened. The secondary is a push to 87, if you recall, 87. That'll come up here in a second. If you recall, the 87 was intended to be, was expected to be resistance for a push higher off the open, and if we get an impulse right off of it, then it's likely to push to 67.75. The idea is we want to hang in there and watch the market move back to balance at 67.75. 67.75 represents the big volume area, and the micro composite for this week. So that's where that stands. Looks like, I wonder if there's an issue. Okay, and so that's where that stands. So in any case, here's what actually materialized yesterday. This chart may look noisy, but it's not. The lines represent something that I'm using. So here we open up around 82.75. 82.75, we test 84, we test down to 80.50. Remember, the 80.50 has been coming back in play. This is where I expected the scenario one pullback to come to, push up to 87, consolidate, chop, and then continue higher. I was looking for a direction for it to go directionally towards 4,100. We put in an 80.50, 84 pullback, get back into the VWAP, and then push into 73. 73 is below the 76 all-time high. 73 puts us back into the prior day's range. We went to yesterday's closing price, 73.5 or so, and then we bounced back up to the RTH mid and VWAP higher low, and then we're squeezing again, and then we finally get to that 87 above, pull back to full session VWAP and mid, and then continue higher. I'm going to say it again. This is my least favorite market regime, where it's just a grinder. It's just a grinder, and it is just the opportunities are such that you have to sit through it a while, and sit through trades a while, and you have to kind of wait through it to work through. And if you catch a full stop, it takes a while to compensate. This is the type of regime where volatility is sapped out of the market, and the ranges are sapped out of the market. And also, we got very low volume yesterday, the lowest volume in over a month in the RTH session. So this is just a buy and hold kind of market, not a day trader's daydream. And that's where we are. We finished very strong yesterday. We did not have a neutral day yesterday. We finished very strong, 4.9550 on the high, and we closed just below that. This portends a strong open. This means that the market has not found buyers, has not pushed and found the extreme, and could not find sellers, and therefore it is expected to move higher in the overnight session, and that's exactly what it did. So that brings us into the overnight session. Yet again, we finished strong. Delta is weak. Delta is below zero. We finished with a relatively weak delta at negative 11,500. Again, that same trend continues. Here's what's happened in the overnight session. The overnight session, we open back up in between the pit and the full session reopen, the extended trading hours, and we immediately push to 40.9850. Then today's session opens and we pull back a little bit and we squeeze, very similar to yesterday's action. We squeeze, we put in a double top at 41.0250, a relatively weak high yet again, and then we fall back off. We end up trading in this 92 range, putting the point of control, the overnight point of control there, but also dragging VWAP and dragging the mid to that point as well. Consolidate. The market's completely balanced at this point with a B-shaped type profile, and then we release to the downside along with the treasuries as discussed earlier. So now we're back in the 40.80 zone. We're trading at 40.84 in the middle of yesterday's range, and that's where we're opening. Again, the delta is negative here, and the story kind of keeps on keeping on. Not very exciting trading. Here's what's happened overall. This is that 67 balance. This is that area that was looking for as a target on scenario 2, 67.75. Yesterday, it pushed back into the 74 right as the high volume node starts for the week, and then it shot off higher from there. This morning, it is really important to see today whether it's able to squeeze through the 92 area, the overnight point of control area, and get back above the 95.50 that was put in as a high yesterday to continue the one-time framing higher. So now we're one-time framing up on the weekly and on the daily, and the question is, does it continue to squeeze that 95.50 and continue to push late shorts out? Or does it turn over and take down the 73, ending the one-time framing up, rotate down through 73, and then if it rotates down through 73 this morning, then 67.75 is the key target. And that brings the market back into balance, brings prices back into balance, puts us in this high volume node that you see on the profile here, and it gives us an opportunity to finish the week in balance and puts in 95.50 as the new all-time high for the week, and we can come into next week potentially exploring lower. I have no attachment to selling. However, I prefer a market that trades both sides. It brings volatility in, it brings interaction in, and that's my preference. But I got to take what it's willing to dish out. As we make a new all-time high, you guessed it, the delta is making new lows. I'm very curious how that's going to shake out in the long run, but that's the general overview. Let's take a look at what's expected for today. Okay, there's a fair amount of structure around us. So here's what things look like. There's a fair amount of structure around this. Again, we have yesterday's point of control above us at 40.87. We have the overnight point of control above us at 40.92. At 40.92. Again, I'm going to draw a box that the market's likely to just crush through, but we have, again, a classic zone here of resistance that's been set up. We have a little bit of an excess at the low. We have a nice taper at the low. It's looking a little bit strong, but the expectation is an open auction in range, just like we saw yesterday. Yesterday we did open out of range, but we had an open auction, and I'm expecting the same. We're opening in range in the middle of yesterday's range. So I'm looking for responsive buying into that 92 area. I'm looking for 40.90 to get tested. I'm looking for it to stall out in here, consolidate sideways, and then continue to squeeze into that 40.99, 4100 century figure right here. That becomes a key target. Why am I looking for a squeeze? Because again, the one-time framing continues higher. There's no indication to me here that the sellers have been found or the sellers are being effective. The sellers are really running for the hills every time buyers come in and push a little bit. The expectation is it does the same, but understand that there's quite a bit of quite a cluster of volume up here and price action, and that's likely to cause an entanglement on the open. Secondary, open, responsive into this zone. The 90-92 zone. Let's put that on here. 92, 90. So I'm watching the zone carefully. If it fails to push through and we get an impulse and a flush, then the 72.50, 73 area becomes key. We take out the overnight low at 40.81, and then I'm looking for squeeze through the 73 and then a push into 67.75. The catch here is I'm actually traveling this afternoon, so you may actually get some volatility again based on the FT71 volatility travel indicator. But this is the secondary scenario. So if we're not able to push up coming into the end of the week, if we're not able to push up, then a lot of hands are going to be weak, are likely to be weak, and we're likely to see a quick rotation down. If we break through the 81, really should be aiming for 73, and if we cannot hold the 73, 67.75 is in the cards. So if you're in there, try to be steadfast and hold into that target zone. Does that make sense? It is Friday. I'd appreciate you hitting the like button if you're on YouTube. If you're on the Edge Clear website, just click on the YouTube button on the video at the bottom right, I think, and go to YouTube and just hit the like button. I have not asked you to hit the like button in a long time. So this is, we used to have like Fridays all the time. I haven't done that in a while. I'd appreciate you doing that. It makes the videos easy for others to find who are searching for futures. Good luck. Watch your risk. Enjoy your weekend. Take care.